Welcome to the deep dive, everybody. Today we're gonna be diving into the world of fintech. We've got a whole stack of sources here, papers, case studies, all sorts of goodies to dig through. So by the end, you'll be walking away with 10 key points. 10 key points from all this, perfect for dropping some knowledge in your next meeting.
Right. We'll be looking at a lot of the exciting forces shaping finance today. Things like blockchain, cloud computing, and even the impact of AI on investment strategies. We'll break down all the complex stuff.
Okay, well, let's get started then. So the first thing that jumped out at me from these sources is this whole idea of a digital economy and the need for something called a digital public infrastructure. It's mentioned quite a bit in Fintech Pranay Gupta.pdf. It almost sounds like we're building virtual roads and bridges or something.
That's a good way to put it. In a traditional economy, we rely on physical infrastructure, right?
Yeah.
Roads, bridges, power grids, all that stuff for things to run smoothly. And similarly, a digital economy needs a solid foundation, a set of digital systems ensuring secure and efficient online transactions.
Okay, so this would include things like robust online payment systems and secure digital ID platforms.
Absolutely. The source highlights the importance of these trusted digital data hubs in this context. These hubs would securely manage and store data, streamlining processes and enhancing the user experience for everyone.
Oh, right, I see. And that reminds me of Singapore's MyInfo system,
Mm.
where residents can use their digital identities for a whole bunch of services.
Exactly. MyInfo is a perfect example of a digital data platform in action. It lets citizens open bank accounts, file taxes, all sorts of stuff using a single government-verified digital identity.
Wow, that's pretty remarkable.
Mm.
I imagine, though, getting everyone on board with these new systems, especially those institutions accustomed to traditional ways, is a pretty big challenge, huh?
Yeah, for sure. Legacy systems in particular are a major hurdle. A lot of institutions struggle to integrate their old, outdated technology with modern digital platforms. It's a bit like trying to merge two completely different worlds.
I can only imagine the headaches.
Hmm.
Now, the paper also talks about open APIs. How are they helping with this transition?
Well, open APIs, that stands for Application Programming Interfaces, allow different systems to communicate with each other, kind of like a universal language for different platforms. It helps institutions connect their existing systems without having to completely overhaul everything.
Okay, so they're like bridges between the old and the new. That
Yeah.
makes sense. Speaking of interconnectedness, our sources really go deep into this whole world of digital identity. It seems like it's a lot more than just online usernames and passwords, right?
Digital identity management it's really a game changer. The source uses Apple Pay as an example. It's revolutionizing how we interact in the digital world.
Yeah, definitely. Remember those days of fumbling with cash or having like
Yeah.
a million cards? Now it's just a tap on your phone.
Exactly. And that's really just scratching the surface. Digital identity solutions have such far-reaching potential. Like, imagine a world where you can seamlessly verify your identity for everything.
Yeah,
Healthcare, travel, even voting.
sounds super efficient.
Hmm.
But with all this sensitive data going, digital security and privacy have to be like major concerns, right?
Oh, definitely. You raise a good point. Protecting our data it's absolutely paramount. And this is where solutions incorporating things like blockchain and machine learning become so important.
Okay, blockchain. Now, this is where things can get a little complicated, right? It comes up a lot in these sources.
Well, not really. Imagine a digital ledger that's distributed across multiple computers. This decentralized system makes blockchain incredibly secure and transparent.
Hmm, I see. So it's not a single central authority controlling everything. It's more like a shared record that everyone can access and verify.
Precisely. And that's what makes it ideal for things like digital identity management. It takes away the risk of a single point of failure and makes data tampering almost impossible.
So the sources talk about India's Aadhaar program, and it seems like a good example of digital identity in action. They started out with a very specific goal, but it sounds like it's evolved quite a bit over time.
Right. So Aadhaar was initially designed to streamline India's public food distribution system. Basically, they wanted to ensure They use biometric authentication to reduce fraud and boost efficiency.
Oh, interesting. So a system designed for one specific purpose actually ended up building this whole new infrastructure for digital identity.
Exactly. Over time, Aadhaar expanded into a comprehensive digital identity platform. Now it links individuals' unique 12-digit Aadhaar numbers to various data points, things like tax IDs and mobile numbers.
Okay, and that would greatly simplify a lot of interactions with, government services and even businesses.
Absolutely. But it also raises some valid concerns about, data security and potential misuse, which the source does acknowledge.
Sure. It seems like finding that balance, between efficiency and protecting personal information is going to be really key moving forward. Now, we've also got cloud computing. Can you explain that in simple terms?
Well, think about how you access websites, right?
Right.
You're the client, and the websites are hosted on servers somewhere else. Cloud computing takes that concept and expands it dramatically. Instead of just websites, you're accessing a whole range of computing services over the internet: storage, processing power, applications, and more.
So it's kind of like having this giant virtual computer at your fingertips without actually having to manage any of the physical hardware yourself. That's pretty powerful.
It is, and the source categorizes cloud computing into three main services: SaaS, PaaS, and IaaS. SaaS, software as a service, is the most common. Think of things like Google Apps or Dropbox.
Oh, right. Instead of installing software on your computer, it's all managed in the cloud and accessible from anywhere. Very convenient.
Right. Then there's PaaS, or Platform as a Service, which provides developers with tools to build and deploy their own applications. And finally, you have IaaS, Infrastructure as a Service, which gives you access to raw computing resources like servers and storage.
Okay, so it's like a whole menu of cloud options, each catering to different needs. But what are some of the crucial factors to consider when actually choosing a cloud provider?
Well, bandwidth is one for sure. That's the capacity of your digital highway, so to speak. You need enough bandwidth to handle all your data traffic.
Good point. And of course, security has to be top of mind, especially when you're dealing with, financial data.
Absolutely. You need to be confident that the provider has all the right security measures in place to protect sensitive information.
Okay, so I see the advantages, scalability, cost effectiveness, but are there any potential downsides to using cloud computing? Things to watch out for.
Yeah, there are a few. One is vendor lock-in, where you become too reliant on a single provider. And of course, as we discussed, data privacy is always a critical factor.
So it's really about weighing the benefits against the potential risks. Now, all of this leads us to another interesting piece of the digital economy puzzle,
Yeah.
Data science. As institutions go digital, they generate tons of data.
Mhm.
The challenge then becomes how to extract meaningful insights from all of it, right?
Exactly. Data science is about transforming raw data into usable knowledge. The source describes it as a combination of hacking skills, math, and substantive expertise. They actually visualize it as a Venn diagram.
So you need people who are technically skilled, understand statistics, and have expertise in the specific area they're working in.
Exactly. So a data scientist working in finance, for instance, needs to understand both the complexities of data analysis and the intricacies of financial markets.
Got it. Now, these sources also point out that data science, machine learning, and big data are often misunderstood. What exactly is the difference between those terms?
While they're interconnected, but they are distinct. Data science is the overarching field. It encompasses various techniques for extracting insights from data. Machine learning is a subset of data science. It focuses on creating algorithms that learn from data and can make predictions. And then big data refers to data sets that are so massive and complex that traditional data processing methods simply don't work.
Okay, so big data is like the fuel for the engine of machine learning,
Hmm.
and data science provides the framework for actually deriving insights and solutions from all of it.
A perfect way to put it. And the source illustrates this with a real-world example: the problem of predicting loan delinquency.
Right. The challenge was to identify customers who were likely to miss loan payments so the bank could, intervene early. Seems like a good example of how data science can be applied.
Absolutely. By examining all that historical data, payment history, credit score, all of it, data scientists can build models that predict future delinquencies.
Okay, so that's a pretty valuable tool for managing risk and, improving lending practices.
Definitely. And the source goes on to explore two types of machine learning: supervised and unsupervised learning.
So if I had to guess, supervised learning involves some kind of guidance, right? like a teacher instructing a student.
Spot on. In supervised learning, we're training the algorithm on labeled data where the desired outcome is already known. So in our loan delinquency example, the data would include whether a customer actually ended up defaulting. The algorithm learns from this labeled data and then can forecast future defaults.
Okay, that makes sense. And then unsupervised learning, that's more like exploring uncharted territory without a map.
A good analogy. Unsupervised learning algorithms analyze unlabeled data to discover patterns and relationships on their own. A good example would be customer segmentation, where the algorithm groups customers based on their buying behaviors.
Interesting. So you're not directing the algorithm, you're letting it reveal the hidden structure within the data.
Precisely. However, it's important to note that data science projects, they definitely come with their own unique set of challenges.
For sure. And Fintech Pranay Gupta.pdf warns about the risk of focusing on the wrong problems, right? Having the best algorithms and tons of data won't get you anywhere if you're asking the wrong questions.
Absolutely crucial. A clear understanding of your business objectives and making sure your data science project aligns with those goals is, it's absolutely essential.
So it seems like data science is becoming even more vital in finance as technology evolves.
Definitely. As we explore further into fintech, we'll see how data science intersects with a whole range of innovations.
Okay, now let's move on to blockchain. This comes up all the time in our sources,
Mhm.
and it sounds like it has the potential to disrupt, industries far beyond just finance.
Right. Fintech Pranagupta.pdf compares the emergence of blockchain to the advent of the internet. They both revolutionized how we interact and transact.
Wow, that's a pretty bold statement. Is blockchain really that impactful?
Well, it certainly has the potential. It's all about its decentralized and tamper-proof nature. As we've discussed, that makes it incredibly powerful.
Okay, but a lot of people still associate blockchain uh, mostly with cryptocurrencies, things like Bitcoin. Is that accurate?
Well, cryptocurrencies were the first application of blockchain, sure, but its potential goes far beyond that. Fintech Pranagupta.pdf actually traces its roots all the way back to the development of semiconductors in the 1960s.
Really? So the groundwork for blockchain was laid decades ago.
Exactly. And over time, as computing technology advanced, so did the possibilities of blockchain.
So I remember reading about proof of work and proof of stake in our sources. Can you explain those concepts in simple terms?
Sure. These are the mechanisms that ensure the integrity and security of a blockchain. Proof of work, or POW, involves miners competing to solve complex computational puzzles. The winner gets to add a block of transactions to the chain and receives a reward in cryptocurrency.
Okay, so it's a computationally intensive process that safeguards the blockchain from manipulation.
Precisely. Now, proof of stake, or POS, offers a different approach. Instead of relying on computational power, it relies on validators who hold a certain amount of the cryptocurrency. And the more they hold, the greater their chance of validating a block and getting rewards.
So it's like having influence proportional to your stake in the system.
Exactly. POS is often seen as a more energy-efficient alternative to POW.
Now, the sources also dive into the difference between public and private blockchains. Could you explain that?
Sure, public blockchains like Bitcoin are open to anyone. Anyone can participate. But private blockchains operate under permissions. They're controlled by a specific entity or a group.
Okay, so it's kind of like comparing a public park that's open to everyone versus a private club with a restricted membership.
Right. Private blockchains provide more control and privacy, making them suitable for certain applications within, say, the financial industry.
So it seems like blockchain is this complex technology with a lot of potential. But how exactly is it being used in finance today?
Good question. Our sources point to a few practical use cases. Let's start with KYC, or Know Your Customer processes.
Oh, right, KYC. That's all about verifying customer identities to prevent fraud and money laundering. How does blockchain help with that?
Well, the source describes how blockchain can streamline and secure KYC processes. Imagine a customer opens an account with a bank, right? Their identity is verified and recorded on a blockchain.
Okay, so then the next time they interact with a different financial institution, that information can be easily accessed and verified, right? No more repetitive paperwork.
Precisely. And Fintech Pranagupta.pdf highlights Project Ubin. It's led by the Monetary Authority of Singapore. They successfully implemented a real-time gross settlement system using blockchain technology. Banks can settle transactions instantly using a tokenized form of the Singapore dollar.
That's that's pretty impressive. Sounds like Singapore is really at the forefront of fintech innovation.
They are. Project Ubin really demonstrates the potential of blockchain to transform these traditional systems.
Okay. Now, asset tokenization is another use case that comes up in these sources. What exactly does that mean?
Well, tokenization is about representing real-world assets, stocks, bonds, even real estate as digital tokens on a blockchain.
So instead of dealing with, physical certificates or deeds, you have this digital representation that can be traded much more easily.
Exactly. This could really democratize investment opportunities, especially for smaller investors who may not have had access to certain asset classes before.
Interesting. Now, our sources also talk about smart contracts being used in exchanges and post-trade settlement. Can you break that down?
Sure, smart contracts are basically self-executing contracts. The terms are coded right onto a blockchain, so they automatically enforce those terms when certain predefined conditions are met.
Okay. It's like having a digital escrow agent ensuring that both parties fulfill their obligations.
Precisely. This enhances efficiency and security in trading and settlement. So imagine a buyer and seller agree on a trade. The terms of that agreement are coded into a smart contract. Once those terms are fulfilled, the contract automatically executes, transferring the assets and the payments.
So that eliminates the need for intermediaries and minimizes delays and disputes.
Exactly. And as blockchain technology continues to evolve, we can expect to see even more innovative applications in the financial industry.
Okay, so blockchain has the potential to really revolutionize a lot of things. Now, what about crypto assets? Are they truly the future of finance?
Well, that's the million-dollar question, isn't it? The source provides a balanced perspective on this. They acknowledge all the hype, but highlight the key differences and similarities compared to traditional assets.
Right, because crypto is certainly a hot topic these days, but there's still a lot of confusion about what it is and how it all works. Can you explain some of the key terminology?
Sure, let's start with mining. People often think of it as literally bigging up digital coins, which isn't quite right.
Yeah, that analogy doesn't really fit the digital world.
No. In crypto, mining actually refers to the process of validating transactions and adding them to the blockchain. Miners use powerful computers to solve these complex puzzles. And the first one to solve the puzzle gets to add the block of transactions to the chain, and they earn cryptocurrency as a reward.
Okay, so it's a competitive process that ensures the security of the blockchain. What about nodes? What's their role?
So nodes are the computers that are connected to the blockchain network. They store a copy of the entire blockchain and help relay transactions and information across the network.
Okay, so they act as these communication hubs within the blockchain.
Exactly. And then we have forks. A fork occurs when the underlying protocol of a blockchain is changed or modified.
So it's like a fork in the road where the blockchain splits into two separate paths.
Exactly. This can happen for various reasons. Sometimes there are disagreements within the community about how the blockchain should evolve.
Got it. Now the sources trace the development of blockchain from Bitcoin to Ethereum, highlighting how Ethereum introduced these smart contracts. That seems like a pivotal moment.
It was. You see, Bitcoin as the first cryptocurrency demonstrated the concept of a decentralized digital currency. Ethereum took that further by introducing smart contracts.
Okay, so Ethereum expanded the functionality of blockchain beyond just transactions.
Exactly. Smart contracts, as we've discussed, enable the automation of agreements and processes on the blockchain. This led to the creation of decentralized applications or dApps.
So Ethereum really turned blockchain from this single-use tool into a versatile platform.
Precisely. And this sparked a whole wave of projects and applications being built on Ethereum's blockchain.
Our sources also talk about this debate about uh, about the need for a token and the rise of these permissioned ledgers that traditional financial institutions are starting to adopt. Can you explain that?
Sure. So some argue that the real value of blockchain is in the technology itself, not necessarily in a native token like Bitcoin or Ether. They believe that permissioned blockchains, the ones controlled by a specific group, are better suited for certain enterprise applications.
So it's like a private network governed by specific rules and participants as opposed to a public, open blockchain.
Exactly. And that approach really resonates with traditional institutions that are looking to leverage blockchain while still maintaining, a certain level of control and privacy.
So blockchain is it's clearly evolving and branching out in lots of interesting ways. Definitely a technology to watch.
For sure. As we dig deeper into fintech, we'll see how blockchain's impact extends far beyond the world of cryptocurrencies.
Okay, let's shift gears a little bit and talk about this idea of open banking. I've been hearing this term a lot lately, but I'm still not entirely clear on what it entails.
Well, open banking is a pretty exciting development that's transforming financial services. The source actually connects it to this broader trend of platform-based business models that we see across a lot of different industries.
Like Uber and Airbnb, for example, disrupting transportation and hospitality
Yeah.
by creating these platforms that connect providers and consumers.
Exactly. Open banking embraces very similar principles. It's all about fostering greater connectivity and collaboration within the financial ecosystem.
So how does that actually work in practice?
APIs, or application programming interfaces, are at the heart of open banking.
Oh, right. We talked about APIs earlier in the context of that digital public infrastructure. They're those bridges
Yeah.
that allow different systems to communicate with each other.
Precisely. In open banking, APIs give third-party developers secure access to bank data. This allows them to build innovative new financial services for consumers.
Okay, so it's like granting access to a bank's vault of information, but in a controlled and secure way so others can create valuable services for customers.
That's a great way to put it. Fintech Pranay gives some good examples. Think of an app that aggregates all your accounts from different banks into a single dashboard, or a service that lets you make payments directly from your bank account, bypassing third-party processors.
Hmm. Sounds very convenient. And
Oh,
it puts more control in the hands of the consumer.
exactly. It promotes competition and fuels innovation within financial services.
Now, of course, with all this data sharing, security and privacy have to be top concerns.
You're right to raise that point. Security and privacy are paramount. Open banking initiatives have to prioritize those safeguards to protect sensitive information.
Okay, so it's about balancing this innovation with responsible data management.
Absolutely. And as open banking evolves, ongoing discussions and refinements will help address those concerns.
Well, this is a lot to think about. I'm curious to see how open banking develops and what new possibilities it creates for everyone involved.
It's a fascinating development for sure.
Now let's talk about trading. It seems like the days of frantic shouting on the trading floor are long gone, right?
Yeah, they are. Fintech Pranagupta.pdf paints a pretty vivid picture of this evolution, from the chaotic trading pits to the sleek digital platforms we have today.
So technology has essentially replaced human brokers and those physical exchanges,
That's right. Automation and algorithms have really revolutionized the way we buy and sell assets these days.
leading to greater efficiency and speed in the markets.
Precisely. Trading has also become much more accessible to a much wider range of participants.
Now, fintech pranagupta.pdf points to cloud computing and APIs as key enablers for new players in the trading world. How has that impacted the industry?
Well, cloud computing gives these fintech startups the infrastructure and scalability they need to compete with the established players, and APIs allow for seamless data exchange. Letting them integrate with existing systems and deliver innovative trading solutions.
Okay, so it levels the playing field, fosters more competition,
Yeah.
drives innovation.
Exactly. And as technology evolves, we can expect to see even more disruption and transformation in the trading landscape.
Now, the sources also emphasize how user experience is becoming increasingly important in the world of trading. Why is that?
Well, investors today, especially millennials and Gen Z, they've come to expect intuitive, seamless digital experiences. They want the same level of ease and sophistication when they're managing their investments.
So it's not enough to just have a functional trading platform anymore. It has to
Right.
be engaging, user-friendly, and visually appealing.
Precisely. Trading platforms are now competing not only on features, but also on the overall experience they offer.
It's amazing how technology is reshaping even the most traditional aspects of finance, isn't it?
It is. And this brings us to another exciting frontier, how AI is revolutionizing investment strategies.
Okay, now that's something I'm really interested in exploring. AI is transforming every industry, and finance is definitely no exception.
Absolutely. And our sources connect this to our earlier discussions on data science and machine learning.
So, are we talking about the same principles that make AI excel in, say, image recognition or language processing? Are those being applied to analyze financial data and, make investment choices?
Precisely. AI's ability to process massive data sets, discover complex patterns, and generate predictions is far beyond anything humans can do.
Wow, that's pretty powerful.
Yeah.
So, how does this new wave of AI-driven investing differ from those traditional quantitative strategies?
Well, traditional quantitative investing relies heavily on mathematical models and statistical analysis. AI-driven strategies take advantage of machine learning algorithms that adapt and learn from new data.
Okay, so it's like having an investment strategy that constantly evolves and adjusts to changing market conditions.
Exactly. Adaptability is a key advantage.
So, what are some of the potential benefits of applying AI to investment strategies?
Our sources point to several, including better risk management, improved portfolio allocation, and even personalized investment advice. For example, AI can analyze huge amounts of data to identify and mitigate potential risk. It can also optimize portfolio allocations based on your individual goals and risk tolerance.
That's pretty game changing for both individual investors and those big institutional asset managers.
Definitely. AI has the potential to make investing much more efficient, effective, and tailored to individual needs.
But with all the excitement, are there any challenges or potential risks that we need to be aware of?
Well, you raise a good point. The sources really stress the importance of transparency and explainability. We need to understand how these AI algorithms are actually reaching their decisions, and we have to ensure that they're unbiased and non-discriminatory.
Okay, so it's about critically evaluating AI's reasoning, making sure it aligns with our ethical values, not just blindly trusting the output.
Precisely. As AI becomes more common in finance, these considerations will only become more important.
Wow, this has been an incredible deep dive into fintech so far. We've covered so much ground,
Uh-huh.
from building those digital economies to the transformative power of AI.
It's been a fascinating exploration. Fintech is it's a truly dynamic space with so much potential.
Now, before we move on, remember I promised you that concise 10-point summary to impress your colleagues. Are you ready?
Absolutely. Let's distill the key insights from our deep dive.
Okay, here we go. Point one. A robust digital public infrastructure is fundamental to a thriving digital economy. Think things like secure digital identification and efficient online payment systems. It requires institutions to, embrace those new technologies and adapt their talent strategies. Point two, digital identity management is a game changer. It streamlines processes, reduces risks, and paves the way for a truly digital-first world. Point three, cloud computing offers scalability and cost effectiveness, but choosing the right provider and addressing data privacy concerns are absolutely paramount. Point four, data science is all about extracting those valuable insights from data. Its applications in finance range from risk management to personalized customer experiences. Point five, blockchain technology, with its decentralized and tamper-proof nature, goes far beyond cryptocurrencies. It's disrupting traditional intermediaries in areas like KYC and asset trading. Point six, crypto assets, they present both opportunities and challenges. You need a solid understanding of the underlying technology and the potential impact on the financial system. Point seven, open banking fosters innovation and competition, but you need robust security measures and consumer education to mitigate the risks. Point eight, the trading landscape is constantly evolving, driven by automation, those new technology-enabled entrants, and the demand for seamless user experiences. Point nine, AI is transforming investment strategies, potentially offering benefits in risk management and personalized advice. But it also raises concerns about transparency and ethical implications. And finally, point 10. Continuous learning and adaptation are key in this ever-changing world of finance. Stay curious, keep exploring, and embrace the possibilities.
Well done. That was an excellent summary of the key takeaways.
Thanks. Okay, so that wraps up part one of this deep dive into fintech. Stay tuned for part two, where we'll continue our exploration of this fascinating and rapidly evolving world. Welcome back to our exploration of the fintech landscape.
Yeah.
We're picking up where we left off, right?
We are ready to dive back in.
Okay, so the next thing I wanted to touch on is is this idea of debt-based crowdfunding. It seems like an interesting alternative to those traditional lending models.
It is. Fintech Pranay Gupta.pdf highlights how these debt-based crowdfunding platforms can connect borrowers directly with investors. They basically bypass those traditional intermediaries, like banks.
So it's kind of similar to peer-to-peer lending, where individuals can lend money to each other without a bank being involved.
Exactly. And this model has really gained traction, particularly for serving individuals and small businesses who might have trouble securing financing through those, traditional avenues.
Right, I see. And the sources point to Lending Club as a good example of this in the U.S. They've facilitated like billions of dollars in loans, connecting borrowers and investors directly.
That's right. And this peer-to-peer lending model, it offers some clear advantages. Borrowers often get lower interest rates than they would with a traditional loan, and investors can potentially earn higher returns.
Okay, but I imagine there are risks involved for both sides, right? For both borrowers and lenders.
Oh, definitely. You have to carefully assess the creditworthiness of borrowers and understand the potential for defaults.
Yeah.
Platforms like Lending Club use sophisticated risk assessment models to try to mitigate these risks.
Right. And our sources really emphasize the importance of transparency and open communication in this space. Borrowers and lenders need to fully understand the loan terms and the potential risks.
For sure. Transparency is absolutely key. Reputable platforms prioritize clear communication and comprehensive disclosure to ensure everyone is fully informed.
Okay. Now, the source also mentions the global impact of debt-based crowdfunding, particularly its potential to address the credit gap in those, developing markets.
That's an important point. These platforms are providing access to finance for people and businesses that are often overlooked by traditional financial institutions. It empowers them to, participate in the financial system and contribute to economic growth.
And that impact is especially significant in regions where access to those traditional banking services is limited. Funding Society's Modalku is mentioned in the source as a noteworthy player in Southeast Asia.
Right. Funding Society's Modalku is a great example of a platform connecting investors with small and medium-sized enterprises, or SMEs.
Yeah.
They're bridging a critical funding gap for SMEs that are often, disregarded by traditional lenders.
So their work is really important for fostering entrepreneurship and economic development in that region.
Absolutely. And the source goes into detail about their innovative approaches, highlighting those user-friendly features for both investors and borrowers.
Okay, so what are some examples of those user-friendly features?
Well, they've developed really intuitive mobile apps and online platforms that simplify the whole process, both for investing and borrowing. It makes it much easier for individuals and businesses to participate.
Right, because that focus on user experience is so important for encouraging adoption and engagement.
Definitely, a customer-centric approach is a key differentiator for any fintech platform that wants to be successful.
Now, our sources also present this really interesting concept of a blockchain-based credit bureau.
Right. So blockchains, tamper-proof and decentralized nature makes it really appealing for managing sensitive information like credit histories.
Okay, so instead of relying on these centralized credit bureaus that are prone to data breaches and manipulation, we could have a system that's more distributed and offers greater security and transparency.
Precisely. And this would give individuals much more control over their own credit data while also enhancing the security and trust within the whole financial system.
That's pretty remarkable. It seems like blockchain is being applied to tackle so many real-world problems and create new possibilities.
It is. As we journey further through the fintech landscape, we'll see even more examples of, blockchain's disruptive potential.
Okay, let's talk about robo-advisory. This is another area that's getting a lot of attention these days.
Robo-advisors are really disrupting the wealth management industry. They use technology to provide automated investment advice and portfolio management services.
So it's like a more accessible and affordable alternative to those traditional financial advisors.
Exactly. The source highlights how robo-advisors are catering to a much wider range of investors, including those who might not have the assets or even the desire to work with a human advisor.
Right. So instead of paying those high fees for personalized advice, people can get automated investment guidance tailored to their their goals and risk tolerance, all through a digital platform.
Precisely. Robo-advisors usually use algorithms to create and manage diversified investment portfolios, often using low-cost exchange-traded funds or ETFs.
Okay, so it sounds incredibly convenient and cost-effective. Are there any real-world examples of successful robo-advisory platforms?
The source mentions Betterment, Wealthfront, and Personal Capital as prominent players in the U.S.
Oh, right, I've heard of those. They've gained a lot of traction in recent years. They manage billions of dollars in assets.
They do, and each platform has, its own approach. Some are purely digital, while others offer these hybrid models that combine technology with human advisors, gives investors options.
Right, that flexibility probably makes them more appealing to a wider range of people.
Definitely.
And our sources also mentioned the global expansion of robo-advisory. Platforms like Stashaway in Singapore and Nutmeg in the UK are mentioned.
Right. Robo-advisory is definitely gaining momentum globally as more and more investors embrace the convenience and affordability of these digital investment solutions.
Now, Fintech Pranay Gupta.pdf suggests that robo-advisory platforms are evolving beyond just simple investment tools.
Hmm.
They're becoming these more comprehensive financial planning platforms.
Exactly. As technology advances and customer expectations change, we can expect to see robo-advisors offering even more sophisticated features and more personalized advice.
Okay, so it sounds like robo-advisory is definitely something to keep an eye on. It has the potential to really shape the future of wealth management.
It does. It's a dynamic space for sure.
Now, let's move on to wealth tech.
Right.
This is a broader term, right?
Mhm.
It encompasses those technological innovations in wealth management.
Right. Fintech Pranay Gupta.pdf provides a really comprehensive overview of the wealth tech landscape. They highlight the trends, the challenges, the opportunities shaping this rapidly evolving sector.
So wealth tech goes beyond just robo-advisory. It includes a whole range of solutions designed to enhance client experiences, improve efficiency, and optimize investment strategies.
That's right. Wealth tech solutions include everything from those client relationship management systems and portfolio management tools to financial planning software and data analytics platforms.
Okay, so it's about using technology to streamline every aspect of the wealth management process.
Precisely. This includes, both front office functions like client onboarding and communication and back office operations, things like compliance and reporting.
Now, the source highlights the rapid growth of the wealth tech market, especially in regions like Asia, where we're seeing a surge in affluent and high net worth individuals.
Exactly. As wealth creation accelerates in those markets, the demand for sophisticated and personalized wealth management solutions grows right alongside it.
And Fintech Pranagupta.pdf actually delves into the specific challenges and opportunities within the Greater China region, mentioning the unique regulatory environment there and how quickly they've adopted those digital technologies.
Yeah, China's wealth tech landscape is it's evolving at an incredible pace. It's driven by factors like the prevalence of mobile payments, a rapidly growing middle class, and the government's push for greater financial inclusion.
So it seems like China is really leading the way in many aspects of fintech innovation.
They are, and their experiences provide valuable insights for other markets that are also navigating this digital transformation of financial services.
Okay. Now, the source also explores some of those cutting-edge applications of wealth tech, mentioning things like chatbots and AI-powered investment platforms.
Right. Chatbots provide that personalized financial guidance and customer support, while AI is being used to transform investment strategies by enabling more sophisticated data analysis and decision making.
It's remarkable how technology is not only improving the efficiency of these financial services, but it's also enhancing the engagement and the level of personalization that's possible.
Absolutely, and this trend is only going to continue to accelerate as technology keeps advancing.
Now, Fintech Pranagupta.pdf also stresses the growing importance of data security and privacy within the wealth tech space.
Of course. Given that these wealth management platforms handle such vast amounts of, sensitive customer data, ensuring robust security measures and compliance with those data privacy regulations is absolutely critical.
Okay, so it's about balancing that adoption of new technologies with responsible and ethical innovation.
Precisely. Trust and security are they're fundamental pillars of financial services, and any wealth tech solution has to prioritize those values.
All right, so wealth tech is it's clearly a dynamic space with potential to really transform how we manage our wealth.
It is. It's definitely a space worth watching.
Okay, now let's talk about reg tech. This is about using technology to enhance regulatory compliance and risk management within financial services.
Right. And Fintech Pranay provides a pretty thorough overview of the RegTech landscape. They highlight the trends, the challenges, and the opportunities shaping this sector.
So it sounds like reg tech is all uh, about making compliance more efficient, effective, and cost effective.
Exactly. Financial institutions are facing this increasingly complex regulatory environment, and RegTech offers a way to streamline those compliance processes, reduce costs, and mitigate risks.
Okay, so instead of relying on manual processes and those paper-based systems, we can leverage technology to automate tasks, analyze data, and ensure compliance with all those evolving regulations.
Precisely. RegTech solutions include everything from KYC and AML compliance platforms to fraud detection systems and regulatory reporting tools.
Right. And the source mentions the Monetary Authority of Singapore, or MAS, as a driving force in promoting RegTech adoption.
The MAS has been very proactive in fostering a regulatory environment that encourages RegTech innovation. They recognize its potential to enhance the resilience and competitiveness of Singapore's financial sector.
It's encouraging to see, uh, regulators embracing technology and working with those industry players to drive innovation.
It is. That collaborative approach is really crucial for cultivating a healthy and sustainable fintech ecosystem.
Now, fintech.pdf also talks about the global expansion of RegTech, noting the growing demand for these solutions across various jurisdictions.
As regulations become more complex and more interconnected globally, financial institutions are looking for innovative ways to manage compliance efficiently and effectively.
Right, because complying with those local regulations is no longer enough. We're operating in a globalized financial system that demands seamless and adaptable compliance.
Exactly. And RegTech plays a crucial role in enabling institutions to navigate this ever-changing landscape.
Now, our sources also emphasize the importance of data security and privacy in the RegTech space.
Of course, since RegTech solutions often deal with, sensitive customer data, ensuring robust security measures and compliance with data privacy regulations is essential.
So it's about finding that balance, leveraging technology to enhance compliance, but also protecting the privacy and security of individuals' information.
Precisely, a thoughtful and ethical approach to RegTech adoption is essential.
Okay, so it seems like RegTech is uh, a really integral part of the fintech ecosystem. It enables innovation, but also promotes responsible and compliant practices.
It is, and as the regulatory landscape continues to evolve, we can expect RegTech to play an even more, prominent role in shaping the future of finance.
Now let's shift our focus to InsurTech. This is all about applying technological innovation to the insurance industry, right?
That's right. FintechPranagupta.pdf gives a good overview of the insurtech landscape, highlighting the key trends, the challenges, and the opportunities in this rapidly growing sector.
So InsurTech seeks to leverage technology to transform every aspect of the insurance value chain, from product development and distribution to underwriting and claims processing.
You've got it. Insurtech innovations are really shaking up those traditional insurance models. They're creating more efficient, more customer-centric, and more data-driven solutions.
Okay, so it's about making insurance more accessible, more affordable, and more personalized, all through technology.
Precisely. Insurtech solutions include everything from those online insurance platforms and mobile apps to telematics devices and AI-powered risk assessment tools.
Our sources point to the use of AI in claims processing as a really compelling application of InsurTech.
Imagine filing an insurance claim through a mobile app. AI algorithms assess the claim, verify all the information, and process the payout automatically.
That would definitely streamline the whole claims process, make it much faster and more efficient.
Exactly. And that's just one example of AI's transformative potential within the insurance industry.
Now, Fintech Pranay Gupta.pdf also talks about blockchain technology's role in insurance. They emphasize its potential to enhance security, transparency, and trust.
Blockchain's tamper-proof and decentralized nature makes it ideal for managing, all that sensitive insurance data, things like policy details and claims records.
Right. So instead of relying on these centralized databases that are vulnerable to breaches, we could have this distributed system that's inherently more secure and transparent.
Precisely. This could revolutionize how insurance contracts are managed or how claims are processed.
The sources also mention telematics and auto insurance. That's where sensors and data analytics are used to assess driving behavior and then personalize those premiums.
Imagine your car insurance premium being based on your actual driving habits rather than, just those broad demographic factors.
That would definitely encourage safer driving, right?
Yeah.
And lead to fairer pricing for everyone.
Exactly. This is a great example of how technology can enable more personalized and data-driven insurance solutions.
Okay. Now, fintechpranagupta.pdf also dives into the challenges and opportunities facing InsurTech. They stress the need for collaboration between uh, those traditional insurers and the more innovative startups.
Right. Traditional insurers have all the industry expertise and the established customer base, while startups bring fresh perspectives and that technological agility.
So it's about bridging the gap between the two and capitalizing on the strengths of both sides.
Exactly. Collaboration is key to driving innovation and transforming the insurance industry.
So InsurTech is another dynamic space with a lot of potential to, uh, create more efficient, customer-centric, and data-driven solutions.
It is, and as technology continues to advance, we'll likely see even more disruptive innovations emerging within the industry.
Okay, now let's talk about how technology is impacting the fast-moving consumer goods, or FMCG sector.
The FMCG industry it's going through this massive digital transformation driven by things like the rise of e-commerce, the growing influence of social media, and the increasing demand for personalized experiences.
It seems like consumers are expecting more from those FMCG brands. They want seamless online shopping, personalized recommendations, and more engaging content.
You're absolutely right. And FMCG companies are they're turning to technology to meet these changing expectations.
FintechBranagupta.pdf highlights this shift away from mass marketing to those more targeted, personalized campaigns,
Yeah.
and it's all powered by data analytics and those digital marketing platforms.
Imagine getting personalized product recommendations based on your previous purchases, your browsing history, and your stated preferences.
Right, that would make shopping a lot more efficient and enjoyable.
Exactly. This targeted approach is much more effective than those traditional mass marketing campaigns.
And our sources also talk about the rise of programmatic advertising. That's where algorithms are used to automate the buying and selling of ad space.
Right. Programmatic advertising allows FMCG companies to reach their target audience with much greater precision and efficiency.
Yeah.
It optimizes ad spend and maximizes the impact of their campaigns.
It's really interesting to see how technology is transforming even those more traditional aspects of marketing.
It is, and this trend is only going to continue as technology advances.
Fintech Pranagupta.pdf also discusses how social media is becoming increasingly important for the FMCG sector.
Social media platforms give FMCG companies these valuable insights into consumer behavior, preferences, and trends. It lets them engage with customers in real time and nurture those relationships.
Right, because it's not enough to just have a website and a few TV commercials anymore. FMCG brands need an active and engaging social media presence to connect with their target audience.
Absolutely. Social media has become this incredibly powerful tool for brand building, customer engagement, and even market research.
Our sources also touch on the emergence of new technologies like augmented reality or AR and virtual reality or VR in the FMCG space.
Imagine using an AR app to virtually try on makeup before you buy it, or
Yeah.
using a VR headset to take a virtual tour of the factory where your favorite products are made.
Okay, that would really enhance the shopping experience, wouldn't it? It creates these more immersive interactions with the brand.
Exactly. AR and VR have the potential to revolutionize how consumers interact with FMCG products and brands.
Now, Fintech Pranay Gupta.pdf also talks about the challenges and opportunities the FMCG industry is facing, emphasizing the need for agility, innovation, and a deep understanding of those evolving consumer behaviors.
The FMCG landscape is constantly changing. Companies have to be adaptable and innovative to stay ahead of the curve.
Relying solely on those traditional product development and marketing strategies simply isn't enough anymore. FMCG companies have to embrace technology and data analytics to create those personalized, engaging, and and seamless customer experiences.
Precisely. The companies that succeed in doing that are the ones that will thrive in this rapidly evolving industry.
Okay, now let's talk about the role of role of regulation in fostering a healthy and innovative fintech ecosystem.
Regulation is crucial. It's about striking that balance between innovation and consumer protection. It ensures the responsible development and deployment of fintech solutions.
Right. So it's about encouraging innovation, but also mitigating those potential risks.
Exactly. And Fintech Pranagupta.pdf highlights the approach taken by the Monetary Authority of Singapore, or MAS. They've been very proactive in creating a regulatory environment that really encourages fintech development.
Right. The MAS has this mantra of not front-running innovation. They want to create regulations that support innovation while still while still addressing those potential risks.
That's right. They've adopted what's called a principles-based regulatory approach. It focuses on outcomes rather than prescribing specific rules.
Okay, so instead of dictating exactly how how fintech companies should operate, they've established these broad guidelines that allow for flexibility and innovation while also ensuring responsible practices.
Precisely. And this approach has been really effective in fostering a vibrant and an innovative fintech ecosystem in Singapore.
Now, our sources also discuss the importance um, of collaboration between regulators and those industry players in shaping fintech regulation.
Right. Regulators need to understand the nuances of these emerging technologies and business models, and fintech companies need clear guidance on those regulatory expectations.
So it's about working together to create a regulatory framework that fosters innovation while also protecting consumers and ensuring the stability of the financial system.
Exactly. Collaboration is it's really essential for a healthy and sustainable fintech ecosystem.
And fintech pranagupta.pdf also highlights some key considerations for financial institutions that are navigating this regulatory landscape.
Right. Institutions need to carefully assess how those existing regulations apply to these new fintech solutions, and they have to make sure they have adequate compliance frameworks in place.
Okay, so it's not just about developing and launching those innovative products and services. It's also about making sure those offerings comply with all the applicable regulations.
Exactly. A proactive and collaborative approach to regulatory compliance is absolutely essential.
All right, so it seems like regulation plays a really important role in shaping the fintech landscape, and the MAS approach in Singapore seems like a valuable model for other jurisdictions.
It is. Regulation is crucial for promoting innovation while also ensuring responsible and sustainable growth within the fintech sector.
Now let's talk about talent acquisition and development. This is crucial for driving fintech innovation.
Absolutely. The success of any fintech company hinges on its ability to attract and retain top talent, people with the skills and expertise needed to navigate this rapidly changing landscape.
Right, and it seems like the demand for skilled fintech professionals is outpacing the supply, right? Creating a very competitive talent market.
You're right. Fintech Pranagupta.pdf highlights the challenges fintech companies face in attracting and retaining talent, especially people with expertise in areas like data science, software engineering, and cybersecurity.
So it's not just about those technical skills. Fintech companies also need people who understand understand the nuances of financial services,
Yeah.
and people who can bridge that gap between, between technology and finance.
Precisely. They need to take a multidisciplinary approach to talent acquisition, seeking individuals from a variety of backgrounds and
And
disciplines.
the sources emphasize the importance of building a strong employer brand and, fostering a positive work culture. That helps to attract that top talent.
Right. Fintech companies need to offer competitive salaries and benefits, of course, but they also need to cultivate an environment that fosters innovation, collaboration, and professional growth.
Okay, so it's about creating a workplace where employees feel valued, challenged, and empowered to contribute their best.
Exactly. That's essential for attracting and retaining talent in this competitive market.
Now, fintech pranagupta.pdf also highlights the importance of continuous training and development. Technology is advancing so rapidly; it's important to keep up with the latest trends and advancements.
Right. Fintech professionals need to constantly update their skills and knowledge. That's
Yeah.
the only way to, stay ahead of the curve and contribute to their organization's success.
So it's not just about acquiring those initial skills; it's about fostering this culture of continuous learning and development.
Absolutely. Both employers and employees need to be committed to investing in ongoing training and professional development.
Our sources also discuss the role of educational institutions in preparing those future fintech professionals.
Right. Universities and other educational institutions need to adapt their curricula and programs to meet the evolving needs of the fintech industry. They need to equip students with the skills and knowledge to thrive in this dynamic sector.
So it's about bridging the gap between academia and industry. It's about ensuring that those graduates are prepared for the challenges and opportunities of the real world.
Precisely. Collaboration between those institutions, fintech companies, and even government agencies is really important for creating a pipeline of skilled talent.
Okay, so talent acquisition and development are they're clearly vital for driving fintech innovation, and it seems like those companies and educational institutions need to work together to ensure a sustainable pool of skilled professionals.
Absolutely. The success of the entire fintech industry really depends on its ability to attract, develop, and retain top talent.
Okay. Let's move on to how technology is transforming those customer interactions within financial institutions, specifically through something called digital client lifecycle management.
Right. Digital client lifecycle management uses technology to streamline and personalize each stage of the customer journey, from onboarding to ongoing engagement and relationship management.
It seems like financial institutions are starting to recognize that they need to provide more seamless and engaging digital experiences. They need to meet the expectations of those tech savvy customers.
You're absolutely right. Fintech Pranagupta.pdf really emphasizes the growing importance of this digital client lifecycle management in financial services.
So it's not just about offering online banking and mobile apps anymore. Financial institutions have to create these holistic digital experiences that cater to each customer's individual needs and preferences.
Exactly. This encompasses, things like online account opening and onboarding, personalized financial advice, and those digital communication channels.
Now, the sources mention technologies like artificial intelligence or AI and robotic process automation, or RPA. They're being used to automate tasks, personalize interactions, and boost efficiency.
Imagine these AI-powered chatbots providing instant customer support, answering those frequently asked questions, and guiding customers through complex processes.
Right, that would definitely improve the overall customer experience and free up those human advisors to focus on more complex and value-added tasks.
Absolutely. AI and RPA are transforming how financial institutions interact with their customers. They enable more personalized, more efficient, and more engaging experiences.
And fintech pranagupta.pdf also emphasizes the importance of data analytics in digital client lifecycle management.
Of course, by analyzing all that customer data, institutions gain valuable insights into their customers' behavior, their preferences, and their needs. This lets them tailor their products, their services, and their communications accordingly.
Okay, so it's all about using data to create more personalized and and relevant experiences for the customer.
Precisely. Data analytics is crucial for, for understanding what your customers need, anticipating their expectations, and ultimately delivering exceptional digital experiences.
Now, our sources also discuss the importance of seamless integration across all those different channels and touch points.
Right. Customers should have a consistent and personalized experience, regardless of whether they're interacting through a mobile app, a website, or, even a physical branch.
Okay, so it's about. All right, welcome back to the deep dive. We're wrapping up our exploration of fintech.
It's been quite a journey, hasn't it? We've covered so much ground.
We have. But I want to bring it all together in this last part, see how all these pieces fit into the future of finance.
Sounds good. And the sources actually offer some really interesting perspectives on that.
Okay, good. Well, this whole rise of AI-driven investment platforms is fascinating. They're really shaking things up, aren't they? Challenging those traditional models.
Yeah, definitely. They use powerful algorithms and machine learning to, analyze these massive amounts of data, finding patterns and making recommendations that humans could never see.
Right. So it's not just gut feeling or limited data anymore. These platforms are making decisions based on a much broader, more comprehensive understanding of the markets.
Exactly. They're processing information from all sorts of sources, market data, economic indicators, company financials, even things like news sentiment and social media trends.
Wow. It's almost like having this global intelligence network working constantly to find those hidden investment opportunities.
That's a great way to put it. And this data-driven approach allows for much more personalized and adaptive investment strategies.
The sources mention factor investing,
Right.
using specific attributes of companies
Yeah.
to build portfolios.
Right. AI and machine learning are they're really key in identifying and analyzing those factors. It makes those factor-based strategies much more precise and effective.
So instead of just investing in those broad market indexes,
Hmm.
these AI platforms can actually pinpoint companies with specific characteristics that are likely to outperform.
Exactly. That granular level of analysis allows for more targeted and potentially more profitable investments.
Now, Fintech Pranay Gupta.pdf also talks about AI's role in risk management, especially in algorithmic trading.
Yeah, algorithmic trading uses computer programs to execute trades automatically based on predefined rules.
And AI is making those algorithms even more sophisticated, right? More responsive to the markets.
For sure. AI-powered algorithms can analyze market data in real time. They can identify patterns, adjust trading strategies, all to, minimize those risks and maximize returns.
It's almost like having this super intelligent trading assistant that's constantly watching the markets and making those split-second decisions.
Precisely, and with a speed and precision that humans just can't match.
So AI and data science are they're clearly transforming investment strategies,
Right.
opening up new possibilities, and really challenging those traditional approaches.
Absolutely. As these technologies evolve, we can expect even more disruption and innovation in how assets are managed.
Okay, but let's zoom out a little bit. How is fintech in general shaping the future of finance as a whole?
Well, it's not just about specific technologies. It's a fundamental shift in how we think about, deliver, and experience financial services.
It seems like fintech is it's making finance more accessible, isn't it? Giving individuals and businesses more options.
Absolutely, fintech is breaking down those traditional barriers. It allows new players to emerge and compete with the established institutions.
And our sources highlight those challenger banks, those digital-first institutions that are really shaking up the industry.
Challenger banks use technology to deliver more personalized, user-friendly, and cost-effective banking services.
So instead of dealing with those clunky old systems and all that bureaucracy, customers can access banking services through these intuitive apps and online platforms.
Exactly, and that customer-centric approach is really appealing to a lot of consumers who are looking for more convenient and transparent banking.
Fintech Pranagupta.pdf also mentions this growing convergence of finance and technology, blurring the lines between between those traditional institutions and tech companies.
Right. We're seeing those big tech companies like Apple, Google, Amazon moving into financial services, offering things like payments, lending, even investment
So
services.
the future of finance isn't just being shaped by, by banks anymore. Tech companies are playing a bigger and bigger role.
Absolutely. And that's a good thing. It leads to, more innovation, more competition, and ultimately better services for consumers.
Now, the sources also highlight financial inclusion, making sure everyone has access to those essential financial services.
Right. And fintech it's a key driver of that, especially in developing markets where traditional banking is limited.
Things like mobile payments, those digital lending platforms, all of these fintech innovations,
Mm.
they're empowering individuals and businesses that were previously excluded.
Exactly. Fintech is a path to financial empowerment. It helps people build credit, access capital, and participate in the global economy.
So fintech is reshaping the financial landscape, creating new opportunities and challenging those old ways of doing things.
It is, and as these technologies continue to develop, we can expect even more disruption, innovation, and opportunity in the years ahead.
Well, this deep dive into fintech it's been an incredible journey. We've explored so much, from building a digital economy to the power of AI.
It's been fascinating for sure, and it's clear that fintech is more than just a passing trend. It's a fundamental shift that's reshaping financial services, and really, so much more.
And as we wrap up this deep dive, I'm excited for what the future holds.
It's an exciting time to be involved in this space. Stay curious, stay engaged, and embrace those possibilities.
Great advice. All right, that's it for this episode of the deep dive. Thanks for joining us, and until next time, keep exploring.